Passive income, a term many dream about but few understand, is essentially money you earn with minimal ongoing effort. It's different from active income, where you trade hours for dollars. The allure of passive income lies in its potential to provide financial freedom and stability, allowing individuals more control over their time and lives. Understanding how to generate passive income can be a game changer. Welcome to Healthy Wealthy Lane. This video will explore simple, actionable strategies that anyone can start with minimal amounts, demonstrating that financial empowerment is accessible to all. Saving just £5 a day might seem trivial, but it accumulates to £1,825 annually. Over a decade, this amounts to £18,250, a substantial sum for most individuals. This simple strategy is the foundation of building passive income because it creates a habit of saving and slowly builds a capital base to invest from. To put this into perspective, imagine you forego a daily coffee or pack a lunch instead of buying it. These small sacrifices can free up at least £5 daily. The key here is consistency. Start by setting up a daily bank transfer from your checking account to a savings account dedicated to your passive income project. Technology can aid in this. Many banking apps now offer features to automatically transfer small amounts regularly without manual intervention. Once the savings accumulate, the real magic happens when this money is directed towards income-generating investments. This is where your small daily savings start to grow exponentially through the power of compound interest and strategic investment. Compound interest is often referred to as the eighth wonder of the world, and for good reason. It's the process where the interest you earn on your savings or investments is reinvested to generate additional interest. Over time, this cycle leads to exponential growth of your initial capital. For instance, investing your annual savings of £1,825 at an average interest rate of 5% annually compounds to over £24,000 in just 10 years. The beauty of compound interest is that you earn money not only on your initial investment, but also on the accrued interest from previous years. The earlier you start saving and investing, the more time your money has to grow through compounding. Even small amounts, when given enough time, can grow into substantial sums. Higher interest rates mean faster compounding, which underscores the importance of choosing the right investment vehicles. When you've accumulated some savings, the next step is to invest that money wisely. Investing can seem daunting to beginners, but it doesn't have to be. Starting with basic, low-risk investments can pave the way to more complex opportunities as your confidence and knowledge grow. One fundamental concept is diversification. This means spreading your investments across different assets to minimize risk. For example, instead of putting all your money into stocks, you might divide it between stocks, bonds, and perhaps a savings account. Choosing the right investment platform is also crucial. Today, there are numerous online platforms and apps that cater to beginners, offering low entry costs and easy management. Finally, it's important to understand the fees associated with investing. Look for low-fee options that don't diminish your earnings. Stocks and shares as passive income. Investing in stocks and shares is one of the most popular methods for generating passive income. When you buy a share, you own a small part of a company. If the company does well, you can earn dividends, regular payments made to shareholders from the company's profits. Additionally, if the value of the company increases, so does the value of your shares. For beginners, it's advisable to start with mutual funds or exchange-traded funds or ETFs, rather than individual stocks. These funds pool money from many investors to buy a diversified portfolio of stocks. It's important to invest in companies or funds that have a history of solid performance and good management. Reinvesting dividends is a powerful way to boost the effect of compound interest. Real estate investments. Real estate is another robust avenue for generating passive income. Investing in property can provide regular rental income as well as potential appreciation in property value over time. One of the easiest ways to get started with real estate investing is through real estate investment trusts, or REITs. REITs allow you to invest in real estate without having to buy or manage any property yourself. For those who prefer more hands-on investment, purchasing a rental property may be a viable option. It's important to consider location, property condition, and market trends when investing in real estate to maximize your returns. property management companies can handle day-to-day operations, making real estate investment more passive. Peer-to-peer lending. Peer-to-peer, or P2P, lending is a modern investment option that allows you to lend money directly to individuals or businesses online, bypassing traditional financial institutions. This can be a highly rewarding form of passive income because the interest rates on P2P loans are often higher than those offered by banks on savings accounts or CDs. Platforms that facilitate P2P lending connect lenders with borrowers, handling all aspects of loan administration. It's important to diversify your investments within the P2P lending space to mitigate risk. Investing smaller amounts across multiple loans can protect you against the potential default of any single borrower. However, it's crucial to understand that while the returns can be attractive, P2P lending carries its own set of risks. Other passive income avenues. Beyond stocks, real estate, and P2P lending, there are numerous other avenues to generate passive income. These include writing books or creating digital products that can be sold online, investing in royalties from music or patents, and even creating automated businesses that require minimal ongoing management. For instance, developing an educational course or a series of instructional videos and selling them on platforms like Udemy or Teachable can provide ongoing passive income after the initial effort of creation. Similarly, if you have a knack for writing, self-publishing a book on platforms like Amazon's Kindle Direct Publishing can allow you to earn royalties indefinitely. Investing in royalties is another intriguing option. The key is to align your investments with your interests and risk tolerance. Combining different sources for maximum benefit. To maximize the benefits of passive income, it's wise to diversify across different sources. This not only spreads risk, but also increases the potential for income, especially if one source underperforms. Combining different types of investments can provide a more stable overall income stream and better financial security. For example, you might combine stock investments with real estate and a side project like an online course. This strategy also allows you to explore different areas of interest and develop multiple skills simultaneously. It's also beneficial to periodically review and adjust your investment strategy based on performance and changing financial goals. Leveraging professional advice from financial advisors can provide insights and guidance tailored to your specific situation. Staying the course tips for perseverance. Building passive income is a long-term strategy that requires patience and persistence. It's important to stay committed and not get discouraged by short-term fluctuations in investment returns. Here are a few tips to help maintain your focus and keep your passive income goals on track. Firstly, setting clear, achievable goals is crucial. Whether it's saving a certain amount, earning a specific income from investments, or achieving a financial milestone, having clear targets can motivate you to keep going. Break these down into smaller, manageable steps to avoid feeling overwhelmed. Secondly, automate as much as possible. From savings to investments, automation ensures that you remain consistent with your financial strategies without having to make daily decisions. Additionally, keep educating yourself. The world of passive income and investing is continually evolving. Your future with passive income. Building passive income with just £5 a day is not only possible but can be transformative. It requires starting small, being consistent, and gradually expanding your financial knowledge and investment portfolio. The journey towards financial independence through passive income is a marathon, not a sprint, and requires dedication and smart financial habits. Remember, the goal of passive income is not just about money. It's about gaining the freedom to live on your own terms. Imagine a future where you are not tied down by financial constraints, where your money works for you, and where you have the freedom to pursue your passions and interests. Start today with your £5 and watch how it can grow into a future of financial freedom and opportunities. Like and subscribe to our channel.